How to invest in NASDAQ. Investing your money is essential to prepare for retirement rather than just stashing money away in a savings account. Instead of buying individual stocks or bonds, another strategy is to invest in index funds that track the performance of the NASDAQ Composite Index, ticker symbol IXIC, one of the major indices for the US stock market. While past returns are not guarantees of future performance, the NASDAQ index has historically performed well. According to Morningstar, the NASDAQ index has an average annual return of 16.03% over the past 10 years. If you want to learn how to invest in NASDAQ index funds, here is what you need to know. What is NASDAQ index? While you can buy individual stocks or bonds on your own, it can be a costly, time consuming, and risky process. A different approach that can help you invest more wisely is to invest in index funds. An index fund is a type of investment, such as a mutual fund or exchange traded fund (ETF), whose objective is to invest in a group of securities that follow the performance of a set benchmark or index. Index funds may invest in stocks or bonds and can be composed of hundreds or even thousands of different securities. While there are many different indexes, three of the most popular are the S&P 500, the Dow Jones Industrial Average, and the NASDAQ Composite Index. The NASDAQ Composite Index is an index made of approximately 3,000 common equities listed on the NASDAQ Stock Exchange. Securities in the index include stocks, real estate investment trust, and American depository receipts. Some of the biggest companies within the NASDAQ Composite Index include Amazon, Intel, and PepsiCo. Investment that track the NASDAQ index. If you want to invest in the NASDAQ index, you have two main options: mutual funds and ETFs. Mutual funds. With a mutual fund, a company pools your money with cash from other investors to buy securities like stocks and bonds. As an investor, you buy shares in the fund. The fund is professionally managed and has relatively low investment minimums. Mutual funds usually invest in hundreds or even thousands of securities at once, so you can diversify your investments. If you're looking for a mutual fund that tracks the NASDAQ index, a popular option in the Fidelity NASDAQ Composite Index Fund. This fund seeks to provide results that closely correspond to the performance of the NASDAQ Composite Index. It has a total expense ratio of 0.28%. ETF. Like mutual funds, ETFs allow you to pool your money with other investors to buy stocks and bonds. However, ETFs are traded on a national stock exchange and at market prices that may or may not be at the net asset value of the shares. If you want to invest in an ETF that tracks the NASDAQ index, consider the Fidelity NASDAQ Composite Index Tracking Stock ETF (ONEQ). This fund invests in 80% of the assets in common stocks included in the index and seeks to provide investment returns that correspond with the performance of the index. The gross expense ratio is 0.21%. How to invest in the NASDAQ index? If you want to invest in the NASDAQ Composite Index, you can do so in just three steps. Identify target NASDAQ index investment. Decide what makes the most sense for you, investing in mutual fund or ETFs. Once you have determined which is best for your needs, you can research top performing funds that track the NASDAQ index performance. Can't decide between them? Consider these key differences. Trading times. Mutual funds can only be traded once per day. All trades are made after the market closes at 4 p.m. ET. If you place an order after that time, your order won't be completed until the next day after the market closes. If the price of the mutual fund share changes, you may have to pay a higher price. By contrast, ETFs can be traded throughout the day. Investment minimum. Mutual funds typically have an investment minimum of $1,000. If you don't have that much saved yet, an ETF may be a better option. You can often get started with just the cost of a single share. Order types. ETFs have more flexibility than mutual funds when it comes to pricing. For example, you can set up limits to automatically buy or sell securities when they reach to a certain price. Second, buy shares with your IRA or 401k. If you currently have an IRA or 401k, you can buy shares of mutual fund or ETFs with your current account. To do so, you just log in into your account and search for your desired NASDAQ index funds ticker symbols. You can enter how many shares you want to purchase and set up automatic contributions to continue purchasing shares going forward. Open a brokerage account. If you don't have access to retirement account, you can open a brokerage account to start investing in index fund instead. When shopping, when shopping around for a brokerage firm, compare companies' minimum investment fees and the type of investments they offer. Some companies allow you to invest in individual stocks, mutual funds, and bonds, while others only specialize in ETFs. If you would prefer to be a passive investor, you may want to sign up for a brokerage firm. This that is also a robo advisor. The company will review your financial goals and risk tolerance and design a portfolio and a set allocation that meets your needs. Investing in the NASDAQ Composite Index allows you to invest in a range of large and small companies and different securities. By taking advantage of funds that follow the NASDAQ index, you can track its performance and diversify your portfolio.